Hello everyone, this is Evan here from the Trade Risk on Wednesday, September 14th with a midweek market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then get into some individual names to finish off the video. Before we get started, I want to just point your attention to a webinar that I'm hosting next Thursday. That's September 22nd. This is going to be a same topic that I covered in last month's, or actually 2 months ago, the webinar that we did. It's going to be our favorite trading setups, the 3 setups that we look for, entry criteria, the exit management, and some different things that we look for. I've had a lot of requests to do this again, people that had missed the last webinar. So I'm going to do this next Thursday, 1 p.m. Eastern. Come to the traderisk.com/webinar. If you head there, you'll be able to put in your email address. It's a free event. Just drop your email, attend the event, and hopefully it's a good time there. Had a good feedback on this one, so hope to see some of you guys there that missed it last time around. And I'll also put a link up here, top right-hand corner. You can click that. It should link to the top to that page coming up right now on your screen, top right-hand corner of this video. So let's get into the action here. It's been fun over the past few days. We've got a pickup in volatility and expansion in range. I've been writing about this a little bit on the site, but let's bring our attention to last Friday. This is where the action started. We had almost a 2.5% drop here in the S&P 500 out of a historically tight range that we were in for many weeks throughout most of July and August. So we had that expansion and breakdown of that range, right? Cleared through this support level of 217 and took out the lows for making new closing lows for the past about 2.5 months. Since then, we haven't really got too much follow through off of last Friday's action. We had a gap lower on Monday, but it was immediately met with some with a trend higher here and a big kind of retracement back up into the almost a retest of the bottom end of that range. But we really haven't been able to make progress below this 212.50 level. So that's a mild sort of constructive point there that we didn't see immediate follow through. The waterfall kind of push lower didn't persist, but it still certainly does not mean we're out of the woods yet. So let's look at the weekly chart before we spend some more time on the daily. The weekly chart, you can see this is a very significant level. This is the all-time highs going back to 2015, and these were the highs that were in place for about 18 months or so, almost 2 years before we broke out in July. So this is a retest of this breakout level. Very high stakes, very significant. You can see on the weekly chart, there's not much damage here at all, right? We're still got a rising and bullishly aligned 8 and 20 period moving average. That's constructive. We're retesting the breakout level. We're retesting the 20 period EMA. This is classic kind of, price action 101 behavior here. So if you're transacting on these longer term time frames, if you're following longer term trends, everything is still fine here. There hasn't been a alarming amount of damage. The concern will be is if we lose this 212 level and we start to spend multiple days and weeks back into this old range, that is when things get more concerning. That's when you'd have to worry if is this some type of big false breakout that we had here over the past few months. But we're not there yet. We're still in sort of a wait and see kind of mode here as the market bounces around. Now, if we go back to the daily time frame, again, I think the interesting thing was Monday we did have this very powerful push retracement back, retracing 60-70% of Friday's kind of carnage, but at the end of the day, Tuesday we gave it all back. So honestly, that is almost more of a negative, that we could bounce back up here, retrap perhaps a lot of people in here that say, okay, this is a V-shaped back to highs, and then the rug gets pulled again on Tuesday. So you have to be cautious here. We've basically now had 2 inside days back to back, right? Yesterday we were inside of Friday's range, and now today we retested to the penny yesterday's lows, and we were inside of yesterday's session. So we're still kind of teetering on the edge here. Sellers have control on this time frame. If you're looking at this for the next couple of weeks outlook, sellers are in control here. The 8 and 20 are curling down, momentum making new lows. There's no doubt about that. It's on the bulls to prove themselves that they do want this market here, and they will buy this dip at 212.50. So for now, they're hanging on, but we still need to see us back, getting back above these moving averages, or at least see more time going sideways here. So that's sort of the way I'm looking at this in the near term. I think the market's certainly vulnerable. I wouldn't be surprised to see another leg lower. At the same time, we love our V-shaped rallies in this bull run, so that wouldn't surprise me either. So for me, it's doing less, it's not being too involved, and it's just avoiding the whipsaw. And even if it's not for financial reasons, it's just emotional to retain your sort of your head in all of this chop and mess. You don't want to get spun around here in this range. It looks like volatility is going to stay elevated for a little bit, and it's fair game to kind of trade around this 212.50 all the way up to 217, and we could bounce around here with overlapping 1 or 2% days for the next week until the Fed decision next Wednesday. So just be aware of that. Understand that the environment changed a bit. Also understand if you are a longer term trend follower or just looking at markets, doesn't have to be trend following. We still haven't seen a lot of damage here, so just understand your time frame and adjust accordingly. If we go to the IWM, you can see we're teetering at some pretty big levels here. 120.50, right? This is the level that has been significant going back multiple years now. We've had a lot of touches of this area. Go back to the daily chart, you can see we snapped this trend line as that we were kind of trading higher in for the past couple of months, and again we're just kind of hanging out here. We are sort of undercutting. We made a new low here on Tuesday, but then you can see we closed right at yesterday's closed flat on the day today in the IWM. So it's very much wait and see. The Qs look hands down the most resilient here, and most of that is due in part from Apple, which is just really holding up this index as it continues to charge higher over the past couple days. We'll cover Apple later in this video, but the Qs, you can see it's fighting to stay back above these 2015 highs, which is very constructive, and we're going to see if that can persist here and get back into this old range, because this clearly is some leadership here, and there's other technology names that are holding up well. It's not just Apple, but Apple's certainly doing the brunt of the work. Now, getting into some of these other markets, TLT, this is also where a lot of pain was suffered here. As this was probably a very crowded kind of long for quite some time. TLT was consolidating for basically like the S&P 500 for the past 2.5 months or so, until last Thursday was the first sort of actionable signal where you got a little bit of signs of crackage here. This is where we actually got short the TLT on Thursday on this bar right here. We had a pretty fast drop from this kind of, I don't want to call this a full failed breakout here, but clearly a failure at that trend line, a sharp move to the lower end where support was. That was our signal to get short. We covered half here on Monday. We covered the other half yesterday, down around 133.70. We were playing this via TMV, which is just the 3x inverse, but it's effectively TLT short. So we're no longer in this. I still think the pressure here is on the bond bulls. Momentum has shifted here once again, just like the stock market. So we're going to need to see the bulls step up. Sellers are in control. You have to be careful. You basically filled this gap. You got some important kind of breakout level retests around this 132 level. That could be the next mark if this downtrend continues, but it's oversold. But oversold can get more oversold. I think you have to be cautious here if you're a bull on TLT until you see a more meaningful reversal. Gold continues to just consolidate here. It's been ignoring a lot of this volatility. It's actually just been kind of trading in its own world. That's probably constructive. I guess it depends how you look at it, but we'll have to see if this can start to shape up here. Silver, pretty much the same situation. I haven't redrawn any of these the recent consolidation here, but you can see it's just kind of moving sideways. Metals not doing a whole lot that are interesting. USO has been selling off, coming back down now to this low that we put in back on the 2nd of September, the 1st of September, that is. So right around this nice round $10 level in USO. So we're gonna have to see how it reacts here. It's still sounding kind of in a messy sideways range in here. It's doing its thing, kind of consolidating. Interested in it, but nothing too actionable just yet. UNG is a bit more actionable. It's had a sharp move higher back to the top end of its range up here, and it is kind of hanging out, closed flat on the day today, more or less. filled the gap from Monday. So we'll have to see if UNG can continue to get going here. If you go to the weekly chart, you can see it is pretty constructive, right? We had the nice sharp move higher throughout June. It's now been consolidating for a few months. If this can start to get going again back above 870 or 865 or so, then UNG natural gas could easily be back in motion to the upside. So for you bulls there, it's something I'm watching, not involved in it yet, but paying close attention to. Let's get into some of the sector analysis now. Let's start with what's holding up well. It's going to be IBB. Biotech has notably been pretty strong here. You can see it actually was trying to take out resistance. It was above, last week's, I believe this was, it was above last week's highs earlier in the session today. It did get faded, but you can see just relative to the market, it's holding up very well here, and that looks very constructive after coming back down and sort of retesting this old breakout area. I do like IBB. It's on my watch. I don't have an entry in this just yet, but I'm paying attention to this, paying attention to the weekly close. I think there could be something there. XLK also holding up. Again, we talked about technology, Apple, and some of those other names. Semiconductors kind of hand in hand, also holding up well. Those are the top three. On the downside, I think a lot of things are looking similar in their kind of sell-off formation to the S&P 500, but XLB, this is kind of making new lower lows each day. It didn't quite, today was an inside day, but yesterday we continued lower. We basically, just are continuing to kind of tread lower here as we kind of hang, as we come back down into this old range. That's a bit concerning. Energy, same thing as oil's kind of trading off and also been pressuring a lot of these names as it kind of comes back below this kind of breakout level that we were eyeing back in a few weeks ago. So this one's a little more cautious. You have to be careful there. And financials, they were holding up pretty well. Again, weekly time frame, you're still okay. Daily time frame, I think, you just need to keep a close eye on these. It's trying to hold in right here, where it was resistance, was support, coming back down to the support level. So just keep an eye on that heading into the rest of this week. The whole rate debate there, if the Fed goes next week, will certainly influence this sector heavily. So let's move into some of these other individual names here. Apple, clearly the standout, bucking the trend over the past couple of days. I know this is on, I believe, a better iPhone 7 pre-orders or sales than the street expected. Very nice. Go to the weekly chart here. You can see it's engulfing the past, 1, 2, 3, 4, 5, 6 weeks of action basically to the upside. Very, very constructive, up 8% this week. It's a monster move for Apple. Clearly, this is back in motion here on the upside, and ever since breaking this downtrend line again back in late July, early August, the tone has shifted a bit here in Apple. We did get that recent pullback late last week, but clearly, the dip buyers stepped up and they like what they see. Running into this resistance here right around 112. Maybe this will stall price action for a little bit, but Apple certainly seems to be the strongest of many as of right now. Facebook also holding up really, really well here. Closed higher today. It's above the 20 period, still just a couple of percent, not even 1 or 1.5% maybe from all-time highs. So really holding up well, showing a lot of relative strength. Keep a close eye on that. Google also holding on to its upper end of what was a range that developed for almost a year and a half or so. So you want to see it hold above 788, 790 level. It's an important area right here, but if it holds more or less this zone, then I think Google also looks good. Amazon, perhaps a little more vulnerable if this sort of little rising wedge takes shape. You can see it's trying to hold on to this trend line here. If you start to get back below 755, then you could get a pretty fast move lower. So just keep this one on watch. It's near all-time, it's still holding up close to its all-time highs, but looking a little more vulnerable than the rest. So that could go either way there. And then let's just end it with Twitter here. which also had a nice day today. Constructive to see it back above $18. For me, $18.80 or so, this general area is where you'd want to see Twitter get back above. That's what would regain sort of the trust, the momentum, the bullish kind of flavor in this one. But, you know, $18 is a small step. You can see the tails on the past 3 days on this downside as bulls kind of step in and drive prices off the lows the past 3 days. So, you know, some signs of maybe trying to get stabilization here, but again, you want to get some follow through back above 1880. Get the live streaming coming up soon, so be interesting to see how that all plays out in Twitter. And with that, let's end there. Hope this video helps. Once again, guys, if you are interested in that webinar, traderisk.com/webinar, drop your email, free event. Come check out what we look at every day and some of the things that that we like to see in stock. So good luck out there. Thanks for watching, and I will catch you next time.